So this all kind of coalesces around the dollar, right? We have a lot of Fed pushback and ECB pushback against earlier rate cuts. We also have geopolitical tensions. Is the buck back?
The buck's always been there, right? It's the reserve currency in the world, strong economy, inflation's coming under control, and where the market's completely mispricing is the expectations this year of the Fed reducing rates 6 or 7 times. The market will be right about that, but it's not going to happen this year. It's going to take a couple years to get there.
Well, is this what we're seeing, though? Is this the repricing?
Well, the repricing isn't really quite there because in March, you're still expecting, what, 68, 70% probability of a rate reduction, and I think that's nowhere close to the mark. Not only does it happen in March, it doesn't happen in May either. And so the market, I think, has their timing off rather considerably because the Fed's going to keep rates higher for longer. And I think they have to because inflation's kind of stuck at 3.5%. And so is employment. Employment's been strong also around those same type of numbers. 3.7, 3.8% employment. And so, or unemployment, and so employment gains of 200,000 jobs. And so with the economy as strong as it is, with employment as strong as it is, and with inflation stuck well above 3%, why would the Fed risk lowering rates to only ignite inflation? They're not going to do that. It's a miscalculation by the marketplace. And so when we think about is the buck back, answer is yes, and answer is that in Europe, and Guy just talked about this just a minute ago, how conditions in Europe are weakening, and we're also seeing that not only with what happened with the sterling, but also with Europe. We think the ECB is looking at potentially recession for the EU, and Germany's borderline recession right now. And so who goes first? Well, the market only has about 25% probability that the ECB is going to ease in March. And there's no way that the Fed is going to ease before the ECB does, I believe, because Europe's in a recession basically already. And so the first one to ease is going to be Europe. And so if our rate's going to be a little higher than theirs, then our dollar is going to be stronger than their currency on a relative basis.